You owe back taxes to the IRS. You've been looking at possible solutions and you really like to do an offer and compromise. You've done some online research and have even consulted your local tax lady. Somehow you've got it into your head that the IRS only does offers for people who are flat broke and just completely down and out. You're definitely not rich, but you do okay. Maybe you've got some equity in your home, or maybe you've got a few dollars in your retirement plan. Do you have to be completely broke to get an offer and compromise? That's the topic of today's video on the other side of the break.
1877 Levy King, Levy Levy King, 1877 Levy King, levyking.com.
What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I've helped thousands of clients with unfiled returns, back taxes, tax liens, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1877 Levy King, levyking.com. I'm also the author of End the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, I'll show you how to stop IRS levies, liens, and garnishments without paying the tax in full. How to set up the payment plan that you want and not the one that they want. And how to potentially settle your tax debt for less than you actually owe. My book has been a top seller on Amazon for years. You can buy it right now for $19.99. But I'd like to give you a copy of the book absolutely free. Just go over to my website, www.endthetaxnightmare.com. You can see it right there. And enter your name and email, and I'll send you a copy right away. No charge, not even shipping, totally free. Endthetaxnightmare.com. Now, before we go any further with the video, please take a moment to subscribe to our channel, smash that like button so you'll be notified each time we drop a new video. And while you're at it, follow us on Facebook and like us on Instagram. Or is it the other way around? Like us on Facebook and follow us on Instagram. There you go. Anyway, time for today's content. If you owe back taxes to the IRS and you've been looking for solutions to your tax problem, I'm sure you've come across the Offer and Compromise program. Maybe you've been told that you have to be completely broke and almost like bankrupt in order for the IRS to accept your offer and reduce your debt. But here's the deal. It's not true. You don't have to be completely broke or totally poor before the IRS will settle for you. You just need to simply prove that you are unable to pay the tax liability within the period of time that the IRS has to collect without creating a financial hardship. That second part is a major key. Without creating a financial hardship. The IRS website says we generally approve an OIC when the amount offered represents the most we can expect to collect within a reasonable period of time. In determining the amount that they can expect to collect, the IRS looks at more than just income. They'll consider monthly allowable expenses, net equity and assets, and monthly discretionary income to try and determine your ability to pay the debt. To make the point, we're going to look at a couple of examples of taxpayers who probably qualify for an offer despite not being totally broke. Our first couple, Mike and Tiffany, are middle-aged professionals who owe the IRS over $145,000 in back taxes. They haven't filed or paid the tax man in several years. Before they came to me, they thought they wouldn't be able to qualify for an offer, or if they did, they would lose some of their assets in the process. Will they qualify for an offer? Now, here we go. Their assets includes 2 cars, their primary residence, 2 retirement accounts, and the cash in their checking and savings. Mike drives a 2017 GMC Yukon worth $45,000. He paid $52,000 and still owes $37,000 on the truck. When we adjust for the quick sale value and the IRS allowances for the vehicle, the net equity is 0. Tiffany drives a 2018 Lexus worth $41,000. She still owes $31,000 on the vehicle. When we adjust for the quick sale value and the IRS allowances, the net equity in the Lexus is also 0. They live in a nice suburban home with enough space for everyone. Their home is worth $355,000. They have paid the first mortgage down to $256,000, and they still owe $11,000 on a second mortgage. When we adjust for the quick sale value and all the allowable expenses, the net equity in the home for offer purposes is also 0. Next up are the retirement accounts. Mike has a retirement plan through his company. He contributes regularly and has accumulated almost $70,000 in his account. It's true that funds held in a retirement plan are considered assets and must be considered in the OIC calculation. The general rule on retirement accounts is that if you have a right to access the money, the IRS also has a right to access the money. You're going to need to examine your company's retirement plan document and determine whether you have the right to access the funds in your retirement account without separating from employment with the company. Some companies limit your ability to liquidate the retirement plan funds while you still work there. Tiffany works for the local electric utility and has a traditional pension plan that pays her based on her number of years of service. She cannot liquidate or borrow against her retirement plan as long as she's still with the company. Now, Mike's job does not allow him to make withdrawals, but it only allows him to borrow up to $10,000 from the plan. After we make our adjustments, we're left with $8,000 that must be included in their offer. Finally, they have about 12 grand in checking and savings. We can exclude most of the cash and only count 3,000 towards their offer. So their total net equity and assets is only 13,000. Assuming they don't have any monthly discretionary income, 13,000 will be their offer amount. Not bad considering they owe over 140 grand. Our second example is Dr. Doug here. He owes over 100K in back taxes. He's a dentist and is the sole breadwinner for his family, which consists of his wife and their 4 children. Although he makes an excellent salary of 170K, it doesn't go as far as you might think in his home state of California. According to the IRS's collection financial standards, Dr. Doug is allowed $28.74 for food, $33.24 for housing, $5.21 for each car, $2.30 for vehicle expenses per car, $2.24 for public transportation, and $6.58 for healthcare expenses. When we add up all of the allowable expenses, including Dr. Doug's $2,404 monthly student loan payment, his total expenses are $13,819, and he has total income of $14,166, which leaves $374 per month, which will count towards his offer in compromise. Assuming he has no other net equity in assets, Dr. Doug would offer the IRS $41.64 to settle his $100,000 in back taxes. As you can see, both of these are really good outcomes for these taxpayers, and neither of them are what most people would consider broke. Despite having strong incomes and assets, they both qualify for the offer in compromise as a means to help resolve their tax debts. Speaking of tax debt, if you owe back taxes to the IRS of the state, I want you to know that there are special programs in place to help you get a fresh start and get out from under this tax debt. But how do you know if you qualify? You see, no 2 cases are exactly alike. So how do you know exactly how much you can settle for? Well, lucky for you, I've created a free tool to help you get qualified for a fresh start. Just head over to www.levyking.com or click the link below. Follow the prompts and answer a few simple questions, and we'll help you figure out your eligibility. That website again is www.levyking.com, or you can give us a call at 1-877-LEVY-KING. Once again, 1-877-LEVY-KING. All right, that's it for this week, guys. Talk to you later. Bye.
1-877